Good day. Ira Epstein with your SPDR ETF wrap-up, and this wrap-up is for Thursday evening, the 24th of March, 2022. You know, the world is strange right now. Here we are, we've got NATO G7 meetings going on. The market's talking about how do you fight Russia. Russia's kicking everybody off their space, by the way, their rockets now that we're going back into space. So Europe's been kicked off. You can count that we'll be kicked off too on these space rides. Okay, thank God we're getting our own things going here. But the Iron Curtain's basically going back up. And as that goes up between Russia's way of life and everybody that it doesn't like in Europe, it gets very strange. We're also looking at what? There's other things going on. Interest rates in the U.S. going up rather dramatically. Each Fed president that's making their rounds now is saying the same thing. Inflation has to be tackled. They're not against if we had to bump up and get a basis point hike to get the Fed ahead of the curve. They're not against that. And I'm hearing it one after the other. They matter, but the real one that matters, as you know, is Fed Chair Powell. They can all say what they want. He makes the final decision. I look at the curve yield doing this. Real mortgages, they're 4.5%. The price of a home, a median price, is $400,000 plus. So I'm looking at all that, and then I look at the inflation that we have, and it's running, what, 7-8% very comfortably. Then I look at everything else around us, and you would say, well, that's not the stuff the stock market likes. Yeah, but the economic data is also good in another area. Today, jobless claims, they're back down in decades lows, 187,000. We cracked the 200,000 number. Then you look at the different regional Fed districts, and you see how strong they are, manufacturing and service sector PMIs. So you put this all together, you have an economy where the jobs are not hard to get. So far, the companies have comfortably been able to push the inflation onto the consumer, and they haven't balked. That is not the stuff that a market falls on normally. You know, in the background, of course, markets would fall on a war, and that's what you have going on in Ukraine. Markets would fall on all the other interest rate and inflation scenario, but they're not. Okay. I'm still looking for the possibility that we're making a trade top right here. Doesn't mean I'm right. The big break yesterday was met by a rally back today. If you take out now these lows that you made today, because today's lows were lower in many cases in the stock indices than Wednesday's lows, that would be the sign to me that you've done that. So at least I have a target. I watch. I'm certainly not bearish other than interest rates. And for those of you that get my morning subscriber video, your TLT, BND, AGG, we keep pursuing the short side on those, and it's been a nice trade. When you look at Alibaba, this whole rally came up, and the market finally reasserted itself by attacking the 18-week average of closes, which is exactly where this market keeps having problems. Why should it not right now? The more important thing is the market's gotten up to the point where it's in resistance. It's not falling apart. The break that we had today covered and got within this high. Therefore, there's no gap left here. Markets don't like gaps, but if you get them, they can add real fuel to the fire. It's not the case. I then look at the market in another way, and I say to myself, well, so what do we have? We still have an island bottom. That's very strong. So where should the resistance be? Probably this whole area right here. You might extend it to this high, but it's right in that area now. The more important thing is it looks to me like a major bottom has been put in Alibaba. The trend is up. The bias is up since you're over the 18-week average. The resistance is the 100-week average of closes. The Bollinger Band resistance and the 100 together should stop the rally. And momentum's overbought. So I think the professional money is, for a moment at least, taking their money off the table and saying to themselves, okay, a bottom's in, what do I want to do with it next? In Apple, it has been straight up since 150.10. Now, in reviewing it, it's pretty simple when you look back. Back right here in these days, I told you, and the videos are out there. Go back there and you'll see the videos. I said, get out your shopping list. It's time that you start buying things you like, be it Coca-Cola, Apple, Pepsi. I was making the names of the big companies where consumers are not going to give up these products. Apple had a great idea today. Apple said it might go to a subscription service. What do they mean by that? Maybe we don't have to buy phones as often as we've been doing. You know, very frankly, the pressure is on. Every third generation, you feel lost if you don't buy the newest iPhone because they get too slow and blah, blah. They're talking of now making it like a Tesla. Over the air, basically, they can upgrade the whole phone, not just updates, a whole different thing. Sounds very interesting to me. And they'll be able to get another monthly stream of the money. I like that. Does it still mean you won't buy hardware? Not at all. If you trade in your car, you'll trade in your phone. Got it? I think they found a business model. Lower low, higher high, straight up. But no, you don't buy Bollinger Bands. Let somebody else own the market there. Disney, I can't wait. One of the guys that is on my trade desk is going to Disneyland next week for the week with his family. He's going to give me a detail of what he's spending. I told him to be ready to be broke. We're going to find out what happens. So this should get very interesting. But Disney's pulled back into an area where it's, I think, being bought. I think the traders will bail if you get under 136.88, but if you don't do that, spring's coming. I don't care what they did in Shanghai. The market shook that off, that they're closed. We're not closing American districts. You get through this high here, why can't you get up to that 147 level, up to the 100-day? In XLI, this is the fight zone. I told traders, I said, I have one set of signals that says buy it right here and another says you don't buy into those two moving averages. They could be problematic. I'm caught. And I'm watching, but I hated that feeling because you're over them and that could give you the pop to the 104.39. If you get under 102.28, then the market that's saying the right thing. So what did I tell my subscribers? I don't mind telling you this. Do nothing. In XSD, okay, in the semiconductors, I'm looking for this market to run into serious issues right here from 213.63 to 220.44. In other words, you've got an uptrend. You've been fighting a battle at the 200-day average now for a week. If you lift, you got a bigger battle at the upper Bollinger Band, and you're overbought. Embed, where both of these numbers, the red and the blue, go sideways over 20, and by it would be Tuesday. Then I can have a different game plan that I'll go into, which is buying more aggressive, even at these levels. I don't have that at this point. When we come over to XHB, I just explained to you the housing issue. 4.5% mortgage. That's pretty steep right now. And you've got lower highs, lower lows. You could easily be coming back here into the 64.72 level. I mean, the home builders got some problems. They have great demand for homes. The prices are insane, and people are being priced out. In the energy sector, the problem goes on. You know, I don't see any solution happening in between Russia and Ukraine at this point. Ukraine is pleading, and that is the right word, that they be given more arms. They wish that the skies were closed. They're proving they can fight. They're proving they have heart. They're fighting a ruthless enemy that is destroying their country. It's that simple. And we are all scared of that maniac in Russia that has his finger on a button. He's the first major person to do this. Mess with me and I'm pushing the button. And he has got everybody, whether we like to admit it or not, plain out scared of him. You may not agree with me, but I'll tell you, otherwise the U.S., we have more weapons than everybody. So does NATO. With NATO, we overwhelm them. There's nothing left of the world. That's the problem. So there's finally a maniac at the helm. We were all worried about Iran. There's a new one in town, a lunatic, Putin. When you get to the gold market, you have a lower low, a higher high. Okay, now what do we do with that? And by the way, I give Joe Biden credit today. He's saying, let's kick him out of the G20. Let's go to G19. It is an organization. Russia doesn't have the right to be there if the other members don't want him. Congratulations, Joe. Stand up. This guy's not welcome anywhere, and make him a war criminal. Go after him when he leaves his border. Let him go wherever it is. Get an extradition treaty. Make sure you have that there. Arrest the son of a gun. He has done war crimes. Lower low, higher high. You're over the upper Bollinger Band. You're not getting a clean buy signal. You did in the futures markets. Absolutely crystal clear. I'm smiling. Today was a good day for my clients that get my advice. Not a lot of good days always. When we look at the gold miners, you're wondering, why did they back off? They've been going up, my friends, as this has been the one stalling out. So they got to catch up with each other. That's what basically is going on there. Copper, you're up at the upper Bollinger Band and a new high in this part of the market. I'm impressed. TLT, okay, be careful. If the red number now closes over 21, I will tell my traders, I'll tell you, this is the secret, be out of all shorts. If you close over 21 tomorrow on it, call it a day. If you went short again, you want to cover your shorts on a break to the Bollinger Band, at least chunk of them, and keep playing that game. Dollar is still bullish. Momentum is finally flattening out. So the support, as I see it, is 26.33. That's where I'm looking for the pros to step in. They'll have tight stops. I think anything under 26.25, 26.24, that's where I think they'd say enough. And they're looking to see, can they get to 26.62. I know you're going to tell me it's not a big trade. I agree. It's about percentages you're risking and playing for. Last in FXC, this is the resistance point. Now, if you're going to get a reversal where the dollar goes down and the euro goes up, I think you have to take out 102.61. Barring that, I think right here where the pros are selling short with stops over that number. It's not a big risk. They're looking at a market with about 37, what is that, 61? So we're looking at 37 cents, 47 cents to look at that on a risk. That's what I think they're doing. I want to show you something that you might like. This is our newest mobile app, and yes, we do upgrades. So if you're a stock, an options trader, you can put your quotes in them, but it does so much more than your phone. What if I tell you you can drive your car and you just say, like you do on Siri, play my quotes. You set up your quote list. It'll play it. You're driving down the road, you're listening to it, it can turn that off. This is the size that we decided to make where you can see quotes. I can read it. I've gone on these other services. I can't read them. They're too small. Charts, you can actually look at and put studies on. My research is all in here. My videos are in here. A push notification comes through the phone to tell you about that. Our news comes out in different formats. All for commodity people. This is commodity-related news, but not in the quotes and all. It goes both ways. Remember, I come from a commodity firm. This is the other part of what our other reports look like. So you get quite a bit of data in here that, again, you can read, you can appreciate, and it's timely. Audio reports. Throughout the day, we're broadcasting what we see in all the markets. You might want to take a look at what you've got there. As I said, voice control. It's wonderful. 'Cause I put it on my phone, and I'm listening as I'm driving down the road, and I can keep up with the markets. We would like to give you a free trial. No credit card, none of that nonsense. Just go to our website, go where it says free trials, take advantage of it. I think you'll fall in love with it. I'm Ira Epstein. You have a great day, and I'll see you all over the weekend. Remember, we have our weekend version coming up now, and that's where I do the weekly charts. I'll see you over the weekend.